Welcome to the channel Get Rich. Today the company we are going to analyze is Caplin Point Laboratories Ltd. So first let's see its business and then the financials and finally the valuation. So let's get started. So first, the sector which the company is operating is pharma sector. So they are mainly operating in generics drugs market. So let's see a glance of global generics drug market. So the global generics drugs market was estimated at around 227 billion US dollar in financial year 17 and 18 and projected to reach a value of around 440 billion dollars by 2028, going to grow at a CAGR of around 7%. So what is generic drugs? So generic drugs are bioequivalents of branded drugs in terms of strength, quality, dosage, form, effect, side effect, and its intended use. Generally, huge investment is made by the pharmaceutical companies for the marketing of innovative drugs. As generics do not require such extensive marketing to establish their safety and efficiency, they offer higher profit margins to the manufacturers. More than 80% of the total global generic market is accounted for by 10 key markets. So what are these 10 markets? Which is United States of America, Canada, Germany, UK, France, Spain, Italy, Japan, China, and India. So the global generics market is set to double in the next 5 years, with major therapeutics coming off patent and increasing demand for low-cost medication. Several big players are moving into the generics drug market, spearheaded by leading pharma companies and specialist pharma organizations, especially in emerging markets. So if we look at India and their exports, so India accounts for 20% of global exports in generic medicines. Indian pharma exports stood at 19.14 billion in 2018-19 compared to 17.28 billion in financial year 2017 and 18. So the exports are expected to reach $20 billion by 2020. So if you look into the table, the pharmaceutical exports from India is growing steadily from financial year 12 around $10 billion to financial 19 it's almost $19 billion. So if you have a look at the countries which India are exporting to, so mostly to North America around 31% is exported to North America, and then 19.4% to Africa, and then 16% to European Union, and then 6.8% to Asian countries, and 6.6% at Latin America and Caribbean, and 5% to Middle East, and 15% to others. So just to have a clarity about Caplin Point Laboratories Ltd, most of their revenues are coming from Latin America and Caribbean, so they are falling into the 6.6%. The company history. So the promoters risked their lives by going to war zone countries where nobody dared. They went into these kind of countries and they got substantial market share from those countries. So the company was listed in 1994. The IPO proceeds were deployed in a manufacturing facility in Pondicherry. The company ventured into the emerging markets of Africa, Latin America, and the Caribbean thereafter to market finished formulations. So Caplin Point was established in 1990 to manufacture a range of ointments, creams, and other external applications by first generation entrepreneur C.C. Parthiban. So Caplin Point is one of the fastest growing small cap Indian pharmaceutical companies. The growth story so far has been based on its unique business model with a strong, deeper presence in semi-regulated markets of Central America like Guatemala, Salvador, Nicaragua, Ecuador, and Honduras. So these are the names which we never heard of in our life. So these are the countries Caplin Point is operating in. This is kind of unique business model because they dare to go into markets where nobody dared to get in, and they became the market leaders in these countries. So is there a risk? Yes, there is a risk, but then they are the market leaders in these countries. Caplin Point is one of the leading formulation suppliers in this region with over 3,100 product licenses globally. To further expand its wings, Caplin is now entering the larger markets of Latin America. It has also forayed into the high risk value US injectable market with its own manufacturing facility. So if you see in the yearly perspective, it started in 1990 and in 2001 it entered into a country Angola where they turned their business around and paid a lot of debts, and then they entered into an asset light model with Chinese formulation manufacturers, and they outsourced their manufacturing facilities and then they are selling products. And then in 2006 Caplin entered Caribbean and South America. In 2014 They commissioned a injectable unit to address US market. In 2017, the injectable facility approved by US FDA. So it is one of the facilities which is approved by US FDA for this mid-size segment. So usually injectable plant have higher capex and it's very difficult to get approval from US FDA, but then the company, very small cap company of this size, getting approval from US FDA is a very good thing. And in 2018, they have a joint venture with Hainan Jointown Pharmaceutical, a large Chinese distribution firm, for entry into China. Most of the manufacturers are getting APIs from China and they want to sell products to China. So they are having a different business model compared to others. So in 2019, company attracted sizable fund infusion into the sterile injectable business from Fidelity USA. So these are the bit of history about the company. What are their business model and where are they present and their strategic manufacturing base? So first, let's look at their geographical focus. They have a unique geographical focus. They are one of the few Indian companies to have presence in Latin America with end-to-end business model. And then they have a strategic manufacturing base because they are not manufacturing all of their products. So they outsource to other manufacturers, and this company manufactures 40% of products in-house, with the rest outsourced to other quality facilities in India and China. Once they have ground in Latin America and started getting cash flows out of it, and they started investing this money into a business where they want to foray into other key markets like United States of America and other main Latin American markets. So they have a growing presence in US market. So they are strengthening the US credential by entering niche high value injectable ophthalmic segments. So that's I feel that's a very good move from getting very good cash flows from these unregulated markets and putting this money for entering in very regulated markets. That's a very good thing. And also, if we look into other thing like vertical and horizontal integration, so they manufacture APIs for critical and complex injectables with control on compliance, cost, and control over supply. They have established world-class fully automated CRO for conducting PEBA studies. They are also doing direct servicing. They are increasing revenue proportion from direct servicing to pharmacists, which reduces intermediaries, thereby moderating cost and enhancing margins. They also have global certifications, so they have state-of-the-art manufacturing facilities with global approvals from US FDA, EU GMP, and then WHO and many other regulators. So let's have a look at their other important things. So they have 3,100 product registered. They have around 200 plus scientists. So they cover the entire spectrum of pharmaceutical formulations with 400 plus products, 36 therapeutic segments in 23 countries. So they have invested around 400 crores in capex and opex through internal accruals on sterile plant approved by US FDA. So they have 12 ANDAs filed till date, with 6 approved and 10 more to be filed by December 2020 in US. They are targeting to file 6 API DMF filings for captive use in financial 2021. They have 35 simple and complex formulations targeted for filing within 2023 under Caplin's name. They have huge ambitions. So they are a very small cap company now. They have a unique business model. They are foraying into regulating market, and they have good compliance, and they have a huge ambitions. I feel that's a very good thing for the company. If you look at the total annual product capacity, they have 1,000 million tablets capacity, 400 million capsules, 600 million vials of liquid injections, 20 million liquid injection ampoules, 170 million soft gels, 30 million suppositories, 6 million bottle of liquids, and they have these are the capacities they have currently. Let's look at their key business segments. They have most of their revenues coming from Latin American markets. So they have 88% of their revenue coming from Latin America, 4% from Africa, and 8% from US. So they have only 2% coming from US in the last financial year. Now they already expanded it to 8% in US. They are constantly increasing their percentage of revenue from regulated markets like US. That's a very good thing. If they can increase their cash flows from US market, then let's have a look at their key market, South America. So they are number one Indian player in Central America. They have invested 400 crores in capex and opex in the last 5 years through internal accruals to enter the US and regulated markets. They increased their Latin American footprint from 2 countries to 10 countries within a decade. So they are increasing their focus to mainland Latin American countries like Chile, Colombia, Brazil, and Mexico. They are doing pharmacy automation to increase profitability and augment strong capabilities in the supply chain. So they are very early adopters from Indian pharmaceutical sector to enter West Africa, Central America, and the Caribbean. Their product mix covers 50% of WHO essential drug list in countries of operations. So they have latest focus towards complex spaces, pharmaceutical soft gels, long-acting injectables and ophthalmics suppositories. So their accounts for large self-share across pharmacies on account of a widening product baskets. So they are doing a very good job. So if you look into Africa, they are one of the first few Indian pharmaceutical companies to extend to West Africa with brand marketing. They have high recognition of CPL's brands across Francophone and Portuguese Africa. They have entered into pharmacy sales through healthcare portal for higher margins and uptake. They increased their revenue 2 times in Francophone Africa in the last 4 years due to their continued focus on innovative products through brand marketing. So they are doing very good job expanding their presence. They are widening their presence in Latin America and Africa, and they are also entering into new markets like mainland Latin American countries and also regulated markets like US and Europe. Let's have a look at the market size of the core Latin American countries, because they said they are going to expand into a core Latin American country. So let's see their market size. So if you look at Brazil, they have $34 billion. So Mexico, $19 billion US dollar. Colombia, $6 billion. Chile, $3 billion. These are huge market size. Then let's look at their sales from Latin America and Africa. So in financial year 16, they have around 310 crores from these Latin American and African countries. In financial year 19, they have around 620 crores from this market. So they are growing at a CAGR of 26%. So going ahead, they are going to grow at 21%. That's the projection from analysts. So in financial 2022, they can get 1,100 crores from this market. So they are going to grow this market as well, but their US business and their other business is going to grow much higher than this growth. So let's have a look at the US business. So they're mainly focusing on rest of the world market, but most of their revenues are coming from US as of now. So first they entered US market in 2017 to 2018 with launch of Caterpillar, currently owned by Baxter. So they launched 4 more products in US through Fresenius Kabi and Caplin's own products. So they are filing a mix of simple and complex injectables in US. That's going to have a higher growth for the company. And then they started joint venture with large Chinese distribution firm Jointown Pharmaceuticals for entry into China. They are focusing on intermediates and API supply to China, as many Chinese plants being shut down on environmental concerns. So a lot of Indian pharmaceutical companies are importing products from China. They want to sell products to China, so they want to enter Chinese market as well, because a lot of people afraid to enter into Chinese market, but Chinese market is the second largest pharmaceutical market in the world, but a lot of Indian companies are afraid to enter into Chinese market. But then they are taking a bold step ahead to go into Chinese market to sell products to China. That's a very good thing, because it's a very huge market. Both US and China are very huge market. They are entering into these two markets. That's a very good thing. Then if you look at the sales from this US business, so in financial 18 it's just 8 crores from US business. In financial 19 it's 16 crores. In financial 20 already 70 crores from US. That's a huge growth, the CAGR of 100%, and they are going to grow at a much higher pace in US than other Latin American and African countries. The projection says that in financial 2022 they are going to reach 160 crores of revenue just from US. So that's a huge growth projection. It's a very good thing, because it's a regulated market and they will get a stable revenue. Then let's look at their sales channel. So they are selling 20% from direct sales, 10% through tenders, and 70% to distributors. But that is going to reduce, because they are focusing on reducing distributors to direct sales. So they are acquiring most of their distributors to gain more margins. So that's a very good thing for the company. They want to reduce the intermediaries, and they want to gain more margins for themselves. Let's look at their manufacturing facilities. So they have a CP1 plant which manufacture tablets, capsules, soft gels, suppositories, ointments and injections, which are approved by INVIMA and WHO GMP. And they have also CP4 plant, which mostly injectables and ophthalmics plant, which is approved by US FDA, EU and INVIMA and WHO. It's Caplin Steriles Limited, which is a wholly owned subsidiary of Caplin Point. So that's very good thing for the company. They are entering into injectables segment. Out of their manufacturing capacity, their in-house capacity is 40%. They are outsourcing to China 40%. They are outsourcing to India 20%. So these are their manufacturing capabilities. And then their product portfolio. They have a total of 2,850 product licenses spread across Latin America and Africa. Tablets and capsules, injections, ophthalmics, liquid oral, soft gel capsules, ointments, creams, and gels, inhalers, powders for injections, suppositories, and ovules, so surgicals and disposables. They have a huge product portfolio, but that's only in Latin America and Africa. Then let's look at their business model evolution. They are evolving with unique business model. They are shift in business models from distributors to retail, as I just said. They are also expanding their generics from simple generics to branded generics. So if you look at financial 11 to 12, their branded generics is just 5%, and if you look at financial 18 and 19, their branded generics expanded to 25%. That's a very good thing. They are expanding from simple generics to a branded generics. That's also a very good thing. And they are also moving from simple to complex products. So they are investing huge in the R&D segment. So that's also a very good sign for the company for the future growth. And then let's have a look at their R&D spend. They have 5 dedicated R&D setups with capabilities to develop safe and effective formulations. They have 210 plus scientists working on development of varied dosage forms such as complex injectables, liposomes, microspheres, suspension injectables, modified release oral solid dosages, soft gel capsules, suppositories, ophthalmic suspensions, and topicals. So they are investing around 40% of current profit after tax into R&D in 2018 and 19, a higher number for a company in their size segment. So they have latest R&D facility at Hyderabad focusing on API R&D in a kilo lab setup. They are scaling up and commercial manufacturing of APIs will be done at CP2 plant in Gumiripindi. Separate teams work on formulation development and analytical studies of molecules for regulated and emerging markets. So if you look at their R&D spend, so that's growing quite fast compared to their revenues. So in financial 2018-19, they spent around 70 crores of R&D expenses. Then if we look into the R&D spend as a percentage of revenues, in financial 16 they spent 3% of their revenue to R&D. In financial 17 it increased to 8%, financial 18 at 6%, financial 19 they spent 11% of revenues just to R&D. That's a very good thing because they are investing more now to get a higher future growth. If you look into the growth opportunities, so what are their growth opportunities? They are investing continuous capex investment of over 160 crores over last 5 years towards enhancing manufacturing and R&D capabilities. They have 12 ANDAs filed with 6 approved and 10 more to be filed by December 2020. They are a debt-free company, no equity infusion, and they have high EBITDA of 38%. They are also going to have a CRO wing of Caplin Point, which is already completed, which will cover BE, BA studies for own products before scaling up as a commercial CRO. Their targeted markets are China, US, EU, and Latin America. That's a very good thing because their cost per study reduced around 50%. So as I said, they are entering into US market for injectables in vials, lyophilized vials, and ophthalmic dosages. That's a very good thing because they are entering into US market. As I said many times, it's a very huge growth for the company in the future. They are also doing deployment of healthcare portal that would generate big data for generics for better product positioning. So getting data is very important. So they are developing their own portal to get data from pharmacists, their doctors, and everyone. So once they have data, they can do a lot of things with it. And then let's look into their subsidiaries. So they have subsidiaries created in Hong Kong, Colombia, Salvador, and most of the Latin American countries for a complete end-to-end business model. It will result into comfortable cash flows and margins. They have continuous focus towards bottom of the profit, creating stickiness factor for Caplin's products. So that's a very good thing. So they have a headquarters in India, and they now, as you see in the yellow, they have a huge presence in Latin American and African countries. Little bit in US. They are just starting to entering into US market. Their expansion plans, if you look at the expansion plans, they are looking to expand into Europe, Canada, and Mexico. So that's a very huge market because they have succeeded in this market like Latin America and African countries. So if they can have a success in US and Europe, that would be very huge growth for the company. The company can transform from small cap to mid cap to large cap if they can do this kind of execution in these countries as well. If you look at their current expansion. So their expansion completed at Unit 1 in Pondicherry, which includes addition of injectable lines, including lyophilized injectables and pre-filled synergies for emerging markets. So their capacity enhancement up to 2x of oral solid dosages and soft gel capsules completed. So they have 5 state-of-the-art R&D sites established, covering entire spectrum of dosage forms and targeting backward integration into API. They are also established CRO wing of the company, and they have global approvals targeted for 2020 and 2021, and they are preparing to file products in China that have been filed approved in the US. So they have 3x capital expansion underway at Caplin Steriles plant. So they have attracted the investment of 218 crores by Fidelity USA to drive strategy quality investor. If we can look at that investment of 218 crores in the injectable business, it already takes the Caplin Steriles market cap of 870 crores. So the Caplin Steriles is a wholly owned subsidiary of Caplin Point. So CP4 has undergone 3 US FDA and 2 EU GMP audits successfully since 2016. Now, many of the Indian pharmaceutical companies, they are having a lot of regulatory issues. This small company, they have cleared regulatory approval 3 times, and with very less observation, with just 2 observations in last 3 years. So that's very good thing. Being a small company, having cleared the US FDA approval is a very huge plus for the company. So they are also doing backward integration into APIs for complex injectable products to drive profits, compliance, and cost control. Then they are also having their CRO division started for captive BA and BE studies. So they have 22 total clinical beds and 70 total staff strength in this. So let's have a look at their management. So CC Parthiban, he has 30 plus years of experience in the pharmaceutical industry. He is spearheading the group in its multi-pronged growth approach. He's a first generation entrepreneur with a focus towards bottom of the pyramid. So they also have a very high qualified and experienced persons on the board, and no family member is available in the board. That's also a very good thing. Also, one thing to note, the chairman Parthiban, he is not taking any salary from the company. That's also seen as a very good thing, because he is interested in the business. He wants to grow the business to a next level. That's the very good thing. Then let's look into their financials. So first, if you look into the revenues, it's grown from 300 crores in financial 16 to around 800 crores in financial year 2020. And it is projected to grow around 25% CAGR in the coming years. Then if you look into the EBITDA, so they have an EBITDA of 83 crores in financial year 16 and already 260 crores in financial year 2020. And if you see their EBITDA margin, it's grown from 27% to 36%. And it's now dropping to 30% to 29%. I think in the future it's going to stay at around 29 to 30% of EBITDA. Then if you look at their net profits, in financial 2016 they have a net profit of around 59 crores, and in financial 2020 they have around net profit of 210 crores. It's almost 3 to 4 times of net profit in just 4 years. So coming to the future, they are going to grow at around 20-25% growth in net profit as well. And then if you look at their balance sheet, so they have a total assets of 70 crores in June 2011, and currently they have around 740 crores in March 2019. So if you look at their borrowings, it's just 1 crore. They are debt free company. They have a resource of 514 crores, and they have a fixed asset of 227 crores. So it's a very good thing. They are growing at a huge growth of 25%. They are increasing their sales, and their net profit is also increasing around 20-25%, and they are a debt free company. So they are just using their free cash flow to fund their growth. That's a very good for the company, because being a growth company, they need capital. So these capital, they are not rising from equity or debt. They're a debt free company and funding their capital just from their free cash flow. That's a very huge plus for the company. So then if you look at the ROE and ROC of the company, so in 2014 they have a ROE of 53% and currently around 30%, and then ROCE of 70% in 2014. Now currently they are standing at around 37%. So it decreased a lot. But then if you look into the absolute numbers in 2020, 31% of ROE, 37% of ROCE, which is very high compared to the industry. Then if you look at their cash flow, they have around 60 crores of cash flow in 2014, and in 2019 they already have 83 crores of cash flow. So they have a steady cash flow from operations. So let's have a look at their free cash flow. In financial 17 they have around 43 crores of free cash flow, and then 18 crores in financial 18. Financial 19 they have around 8 crores of free cash flow. So in financial 2020 they are going to have free cash flow of 63 crores, and financial 2021 it's going to 190 crores, and financial 2022 it's going to go at 250 crores. Because why the cash flow decreased now? Because they are investing a lot in expanding their US business in injectable plant. That's why now once the capex is completed they can have a huge cash flow in the company. Then let's have a look at the shareholding pattern. So the promoter holds around 69.03%, and 7.43% is held by FII plus DAI, and 23.5% public. So if you look at the promoter holding, it's quite constant, it did not change much. And if you look into the holdings of FII plus DAI, they have around 7.11% in December 2018, and it went slightly up to 7.47% in 2019 December. Let's have a look into the valuation. So in financial 2016 the company had a revenue of 240 crores. In financial 2020 they already have a revenue of 830 crores. So I'm expecting the revenue to grow at around 22 to 23%. So in financial 2021 the revenue is going to go at 1020 crores, and financial 2022 it's 1250 crores. In financial 2023 almost 1500 crores of revenue. If you look at the net profit, they have net profit of 46 crores in financial 2016, and they have 216 crores of net profit in financial 2020. So I am projecting the net profit to grow at around 25%. So the first year it just grows 10% because the EBITDA margin it's going to contract a bit, and then it's going to stay around 29 to 30%. That's why the slower growth in net profit for the first year. But then in net profit they have around 237 crores in financial 2021, and 300 crores in financial 2022, and 370 crores in financial 2023. So if you look at the valuation, so currently it's trading at around 13 PE. So with the current valuation I'm estimating the price target of 408 rupees for 1 year, 514 rupees for 2 year, 640 rupees for 3 year. So with the price cumulative growth of 16% for 1 year, 46% for 2 year, and 82% for 3 year. But then the PE it is trading at, it has a quite a discount at 13, but I feel it's going to trade at much higher valuation than 20, but I am estimating conservatively with PE of 20 since it's a small cap. With the PE of 20 I'm estimating the price target to be 628 rupees for 1 year, 791 rupees for 2 year, and 985 rupees for 3 years, with the price cumulative growth of 78% for first year, 125% for second year, 180% in the entire 3 years. So the stock can triple in 3 years. That's a very high growth, high return. But then we have to understand that there is a huge inherent risk in the company as well, because since it's a very small cap company, it's doing good, it's a good company, but there is always a huge risk associated with a small cap company like this. So but I am fairly confident that the company is going to do well, and they are going to have a valuation of around 985 rupees for 3 years. With they can triple in price as long as they can expand their business with US, and they can grow into regulated markets, and they can have their current execution success in these markets. They will grow at a much higher pace. They can grow into a small cap to mid cap companies, but there is a risk. So don't allocate huge portion to this company. So you can have around 2% to 3% or maximum 5% in this company of your portfolio, but then no more than 5%. So I would recommend 2.5% of your allocation for this company. Since it's a small cap, you can take part into this high risk high reward, but then don't put much money in this company. So that's all for today. Thank you for watching. If you like this video, like, share and comment. Yeah, subscribe this channel, and have a nice day.